Good afternoon, everyone. We're going to wait just a minute or two to let more folks log on in.
Institute Audit, all of us, thank you for joining me today. And
Okay. David, we got 20 folks in. You want me to go ahead and get started? You want to wait a minute?
Let's get going.
Okay. I'll take up a minute or two, and that'll buy you some time for folks to come on in. Good afternoon, everyone. Welcome to our Money Matters webinar series, co-sponsored by the U.S. Small Business Administration. My name is Ken White, and I'm the Executive Director of the Maryland Black Chamber of Commerce. Next slide, please. We want to certainly thank our sponsors for allowing us to present series like this. And our financial sponsors are Montgomery County and Prince George's Financial Services Level Up program. So thank you to our sponsors. Real quick, the Maryland Black Chamber of Commerce was established in 2015. Our mission is to educate, advocate, and connect Black-owned businesses in the state of Maryland. Our membership ranges from as far north as Hartford County down as far south as St. Mary's County. And we have offices headquartered in Rockville, Maryland, and we have a satellite office in Hagerstown at the Hagerstown Community College. And we are soon to have a satellite office in Prince George's County. So we are expanding our reach. You can reach us at this information, went a little past it, but we can be reached at www.marylandbcc.org. And we invite you to follow us on social media, Twitter, Facebook, and LinkedIn. We have a lot of activity going on right now. If you're in our database, you're getting lots of information. Right now, we have our Doing Business with the Federal Government series starting this month. We have Doing Business with the State starting this month. We just completed our Doing Business with Montgomery County series, and we're in the middle of our Doing Business with Prince George's County series. And we have our franchise series that began today, and we have our Money Matters series that David is going to be facilitating on the second Wednesday of the month moving forward. Actually, it's the first Wednesday of the month moving forward. And so we got a whole lot of stuff going on, so please stay tuned and be aware and participate. We do have an event coming up in June that I want to share with you. We're having a Juneteenth event at the Brookside Gardens. It's going to be a wine tasting, a beer and wine tasting event. It's going to be sponsored with Black Brew Movement. The brewery and winery are local, Black-owned brewery and winery. We're going to be doing some food pairing. We're going to have presentation from the Banneker Douglas Museum. We're going to have presentation from the Maryland Commission on African American History and Culture. We will have live jazz, and we will have spoken word and an art exhibit. So stay tuned. That information should be coming out shortly. And with that, I've done my obligation of my 2-minute commercial for Maryland Black Chamber of Commerce, and I will turn everything over to Dave Hincapie, the Economic Development Specialist, Veteran Business Development Officer at the Washington Metropolitan Area District Office for the U.S. Small Business Administration. And David, it is now your show.
Okay, thank you very much. Welcome everyone to this. I have a co-presenter with me today, an actual real live banker that we went out into the wild and found one in the business jungle. She has decades, literally, I'm not exaggerating, of experience as a commercial lender. And I wanted her to be here because this is a building credit webinar, and this module is with building credit. And you all want to know how to do that. So that way, you know, it's not just David, that government guy, he doesn't know nothing. He's just saying stuff. No, we have an actual real live banker here who's going to give you the good information and to back this up. All right.
I'll add 2 cents. So Kathy Speakman, I think you and I met doing the SBA Quality Circle events back in like I want to say 1997, 1998.
You got it, Ken.
So yeah. So when David says she has tons of experience, Kathy and I go way back in the banking industry. So you really got a good one here today.
That's
well,
hilarious.
Thanks for the invitation. And I'm looking forward to seeing this.
That's hilarious. You two are so experienced. You've been doing it 10 years before the birth of the iPhone.
Thanks for putting it that way, David. But yes. We did have computers though.
Yeah,
so that was nice.
Sure.
But things were in the SBA world, things were delivered to the district office by FedEx or courier,
right,
as opposed to electronically now. But just have to add too that I'm with the National Capital Bank talking about old institutions. Not that I'm an old institution, but we're 134 years old, and a community bank here in District of Columbia, doing lending throughout the DMV. So.
Right. So I'm going to get into it. I'm going to share this presentation. We're going to get right into it. And in your, I'm also going to put up well, actually, I'm going to share first the quiz. And I want everybody to answer this. Now, I'm assuming you all have it up on your computer or you printed out the participant guide because you should have done it. Yes, I'm wagging my finger in your face because you should have done it because we told you about it. All right, so let me share this screen with you just in case. Share screen. I'm going to find this here. And I want people to go through, answer these questions. And this is how I want you to answer. I want you to go into the chat and just under your name, put number 1 and give an answer, like number 1, comma, A, B, or C. Number 2, comma, just in one chat. Don't hit enter after each question, because otherwise it'll get all out of control, right? Just go 1, comma, answer, 2, comma, answer, 3, comma, answer. I want you to go through this. First question, which of the items listed below may appear on a personal credit report? If you don't know, that's fine. This is a pre-check. This is actually a teaching technique that has been verified by research to help people. If you do a pre-quiz, when we cover the material, it primes your brain. It prepares your brain to receive material, doing a pre-quiz. That's why we do this pre-quiz, right? Prepares your brain to receive material so that you retain the material. Question 2, select all business credit reporting agencies from this list. I'm going to scroll up again. Question 3, business credit reports do not include public records information about a business. True or false? Number 4, personal and business credit scores are the same thing. Number 5, a lender may use the following factors, among others, to determine whether to make a loan to my business. This is, I don't like the way this is worded. A lender can use, this implies that a lender may, meaning someone gives them permission. No, a lender might use the following factors, among others, to determine whether to make a loan to my business, right? And you must abide by the Fair Credit Reporting Act if you give information to a credit reporting agency. For example, if you extend credit to someone or to another business, or if you obtain credit reports from a credit reporting agency because you're thinking of extending credit to someone, right? So you have to abide by that. All right, that's the quiz. I want to look really quick here in the chat. All right, come on, guys. 1B, 1A. All right, it didn't work. I was hoping you'd all put your answers in one, one thing, so we don't have this many to look through. 1B, 1A. All right. Civil judgments, employments. I just want to see what the answers are right here. B and E. I don't know what, Ruby, I don't know what number you're referring to, but you said B and E. I never text his quiz. I don't know what that means. Ruby answered A. I don't know what question it's for. Okay, Faye answered 2A. Select all business credit reporting done in Bradstreet. Okay, all right. 3, there's no answer there. I don't know what you mean. Ruby says F and F. I don't know what question number it is. Faye Peterson, 4. She doesn't know. That's cool. We don't expect everybody to know everything. This is a pre-quiz. This is prepping you. 5A, my personal credit reports. A lender might use the following factors among others. Okay. 6, A, true. Okay. Someone answered F. I don't know what question number. Oh, A Bridges said E, B, C, F, A. Okay. My credit reports, blah, blah, blah. Okay, I see. Blah, blah, blah. What? Here we go. Yvonne, I like how you pay attention to detail here. All right. 1D, income. Which of the following may appear on the credit report? 2, A and E, Dun & Bradstreet and Small Business Financial Exchange. 3B, business credit reports do not include public information. False. Okay. 4B, personal and business credit scores are the same thing. False. 5, A through D, a lender might use the following factors: my personal credit reports, my business plan, my business financial statements, projections, account history, and my personal opinion of the viability of my business. Okay, so she said all of the above. And then 6, A. All right. Okay, there we go. Okay, so now I'm gonna turn this one off and we are gonna go right into the thing. So this is prepping you for the sort of stuff we're gonna talk about. All right, so let me do this. Stop the share, and I'm going to share now the actual presentation to get us going. All right, now let's make this into a slideshow. And from the beginning. All right, you also should be seeing that slideshow. Okay, so listen. This is the building credit module in the Money Smart for Small Business series. And we're going to demystify some things, and we might surprise you with some new information, and we're going to get right into it. Now, I am sorry, this is text heavy. I want to find time to make better versions of this that are not as text heavy, because I don't want to just read to you. I like having a conversation more, because this thing was originally designed to be done in person. We get in a room together, we get 20 people together. Yes, there's a presentation, but we're having a conversation. So I'm going to do my best to simulate doing that here, right? Okay, so look, we did the pre-survey. There's a couple of sections involved. There's the big picture, credit reporting. Now mute yourself, please. Keep yourself muted. The big picture, credit reporting in my business, the impact of personal credit on my business, what's business credit reporting, how lenders evaluate your credit worthiness. This is the big one here, because this is where Kathy's going to give us a lot of information. Section 5, credit reporting and business operations, and then we'll do a summary, post-survey evaluation, have a conversation. Okay, so now The learning objectives. We want you to understand how the personal business credit reporting landscape relates to your business. We want to identify what goes into personal and business credit reports and scores. We want to learn how to establish and build strong personal and business credit histories. Understand how lenders and others may use your personal and business credit information. Look, a lot of this training and a lot of these classes, what it is helping you understand how the other side looks at credit. You right now only think of it probably in terms of what you need, what you're looking for, your imperatives, your goals. But credit is a two-way thing. It's two parties are involved. There's the extender of the credit, right? The person you get the loan from, the institution you get the loan from or the credit line from, and there's you. And you are involved in this relationship and they have another point of view. And they have different things that drive them. So you got to understand what drives them. In the same way that you have to understand your customers. You have to understand your customers because you have to understand how they approach what they're buying. So you have to understand how the credit extender, right, how the lender approaches this. All right. Now, we're going to talk about this is another one. Learn how credit reporting businesses services benefit your business. How do you leverage strong personal business credit histories for better financing terms? And recognize when business credit history may become a bigger factor, right? It may not be a big factor right now, but it could be in 2 years. All right, what do you currently know? What do you want to learn? We did the what do you know form or the pre-survey. Get in, big picture. Why are these agencies important? Because you're going to seek financing. What else? Here's another point of view that you probably haven't considered. To manage your debts and obligations, right? To assess and reduce risk before entering into a relationship, right? So who's assessing and reducing the risk? You might think that the lender is the only one doing that, but you're doing that as well. Because when you take credit from someone, you are taking a risk because now you've agreed to an obligation. You now have an obligation. That's a risk. Not all risks are bad, but that's a risk, right? Not all risks are very extremely dangerous, but it's still a risk and you should assess it and you should reduce your risk before entering into this credit relationship by getting credit from someone. So here we go with a definition of credit. It's the ability to borrow money or goods based on the promise that it will be paid back. And it's important for the financial stability and success of individuals and businesses. Now, key phrase here. On the promise that it will be paid back. That's everything. The ability to repay the loan. When you're looking for credit, they are looking for your ability to repay the loan or repay the credit line if that's what you get, right? The ability to repay. That's the most important thing here. Now, why is it important for the financial stability and success of individuals and businesses? Well, sometimes you have business opportunities that require you to spend cash that you don't yet have. In other words, you find yourself in a situation where you could do this business, you could provide this service, you could sell these products or whatever, but you just don't have cash to buy the products to sell, to get the inventory, or you don't have the cash to hire the people to help you produce the service that you're going to sell that you're going to get paid for later. You see this particularly with like contractors that sell to governments. The government's going to pay you later. They need you to do the work now. But to do the work now, you need cash now. But you don't have cash now, so you go look for credit. This is what they mean about the financial stability and success of your business. Personal versus business credit history. Personal credit history. A record of your use of credit reported to the consumer credit reporting agencies. Most of us are familiar with this. Now, your business's record of handling debts and financial obligations, that's also reported to business credit reporting agencies. That's the difference here. This is going back to the thing we were talking about. Remember how I said, you're going to need this cash to do the business so that you can get paid later? What you are is in a kind of cycle like this. You can start anywhere in this cycle, depending on your situation. Maybe you have a second car in your family and you decide we don't need the second car, so we're going to sell that second car, and we're going to get some cash for it to help start the business. All right. Some people do that. A lot of people do that. So now you have cash. So that means you can start at the 3 o'clock or the 6 o'clock. You can acquire, because you have cash, you can acquire or make the inventory or create, deliver the service. You can purchase necessary equipment and materials because you have cash. Then you can manage that that's working capital. And you eventually get paid. And maybe for the next round of the cycle, you need more working capital than the one that you had from selling that used car. And now you have to access finance. But let's say you successfully access financing. Now that you have that cash from accessing the financing, in other words, getting the credit, you go right back into the cycle again. That's what you're doing over and over again. That's what a business is. It's doing this over and over again. Okay. That's how to begin thinking. Now, this schematic here, it's useful. This is not exactly how things happen for everybody. And here I want to have Kathy comment on this after I go through this. The age and growth of the business. Aspiring entrepreneurs and emergent businesses will need to rely heavily on personal credit as a business is established. Then they say, and so you have the importance of your personal credit history is very high. If you look along the left, the vertical axis, it's very high. The importance of your personal credit history is very high. And then as the small businesses grow, the business credit will become more important, but personal credit is still a factor. And then only very large and sophisticated businesses may not need to rely on the business owner's personal credit history, right? And so you see, as the business ages and maybe gets bigger and large and sophisticated, the importance of business credit along the horizontal axis, that increases, but along the vertical axis, it decreases the importance of the personal credit. Kathy, your comments on this, on what you have seen in the small businesses that you have worked with over the years.
Yeah. To kind of hit home why personal credit history is important, especially when you're starting out, because again, we're looking at the primary source of repayment is always the cash flow of the business. If it's a new business and we don't have anything really to rely on except for projections, makes it all more important that the principal, the owner of this business, will always have to guarantee the debt. We're always going to look for you to step up in the worst case scenario and your business can't repay this loan. That's why we're going to ask the personal guarantor. And that is why your personal credit is good. It's so important, because we need to know that when it's in that worst case scenario, again, it's time for you to step up, that you have a history of paying your debts on time, and that you don't have loads and loads of personal debt that would prohibit you to do it. And honestly, small business lending, people always ask, like, well, how long will I have to personally guarantee my loan? As long as your business is really considered a small business. I mean, if you get really large and now you're maybe traded on the stock exchange or you've gone public, that's when maybe we don't need a personal guarantee, or if it's cash secure. So always the personal credit score and the personal credit history is very important, but most important when you are a young business, or when we're really looking at that personal guarantee as a secondary, the backup repayment of the loan. Because as David said in the very beginning, it is all about the repayment of the loan. Banks lend the money out. It's kind of represented by our depositors' money. We need to get that back.
Yeah, this is so important. I wanted people to hear this from you, because like, put out of your mind right now, put it out of your mind that your personal credit history is not going to matter. Put it out of your mind until you build a company that goes public and is traded on an exchange. Put it out of your mind. It's gonna matter. So how you manage your personal stuff, whether this is true or not, right? Because there are exceptions to this, is a reflection of how the lenders think you're going to manage your business stuff.
Mm-hmm. Correct.
There are exceptions. There are people who are great at running businesses and in their personal life, they're insane. I mean, they're nuts, right? They lose money, they gamble, whatever, but they manage their business well. Hey, that's an exception. Most people, it's a reflection. If you can't handle your personal stuff and keep that credit score high and manage your personal credit well, you're not going to be able to manage it. That's a reflection of it. That's how it's used as a proxy for that. You got to remember that. All right, the next thing here. So here's a little case study, and this is part of it. This is in your booklet. It's discussed there. So have you applied for business loans or credit in the past? What information and documentation are you going to need? Did the lender tell you if he or she would need to check your credit history? All right. Almost always going to tell you. So we're going to get right into it. The impact of personal credit on your business. What does a personal credit report do? It tells them who you are, how much debt you have, how long you've had it, how frequently you have applied for credit. And we're going to tell you why it's not a big deal that you get 4 or 5 credit checks in 30 days, right? It's not always a big deal. People worry about that. How much credit are you using? This is really important. How much of your available credit you're using? Whether you make on-time or late payments on credit accounts, and what negative information about you exists in public records like bankruptcies and foreclosures, right? What's in there? That's what's in there. Here are the 3 major consumer credit reporting agencies: Equifax, Experian, and TransUnion. Right? They each have different models. They have mathematical models. These are statistical models for assigning a credit score, saying based on this factor and this factor and this factor and this factor, we think this person is this risk level, and they assign a number. What are the risk factors? How much of your credit available to you are you using? You're going to see this again. How long you've had accounts, which is why, for example, a young person with no previous credit, it's very difficult for them to get credit because they've got no history. It's a catch-22, I understand. How do you get history if you don't have, how do you get history if nobody gives you credit because you don't have history? Well, there's ways to do it, but those are the factors. Age of the accounts that you have, how much of what fraction of the accounts you're using, have you been late? These factors are put into a statistical model and saying, we have 100 people, and 100 people with these factors, right? Because I know not everybody's into statistics, so let me break down to you in the simplest possible way what these models are. I have 100 people. I'm going to look at these factors, and when I have factor A, B, C, D, and E in these 100 people, I don't know which 20 people are going to be late on payments, but I know 20 out of the 100. I can't say it's going to be David or Kathy or Ken. I don't know if they're in the 20, but I know 20 out of them are going to be late at some point. That's what the models are for. That's what your credit score is saying. Your credit score is saying, oh, your credit score is 770. What that's saying is, with these factors, I know you're not going to be one of those 20 who's going to be late. You're not going to be. All right. Personal credit report information. What do we find in there? Identifying information: your name, social security number, current and previous addresses, date of birth, telephone number, current and previous employees, spouse if you're married. Credit history examples: open credit accounts. That means your credit cards. That means your car loan if it's not paid off yet, right? It's still open. That means student loans. That means any other consumer.
Home equity lines.
What's that?
Home equity lines of credit.
Home equity lines of credit. Anything that you're currently paying that's still open. Charged off accounts. This means accounts that you didn't pay and the creditor, they just gave up. They're like, okay, we're never going to get it. They're charged off. Whatever. It's a loss to them. Collection accounts, what you have that's in collection. It's not charged off yet. They're still trying to collect it. And consumer statements. Now, let me say something about collection accounts and charged off accounts. And I won't use anybody else as an example except myself. Right? I'm out myself. Once upon a time, I was young and stupid. And I have charged off accounts from a lifetime ago, from when I was a young idiot who didn't know how to manage my money. And I had stuff in collection too. This stuff really can hurt you. Now, I wasn't at that time trying to go out and get a business loan or anything like that. So it didn't hurt me in that way. But it did limit me in a couple of things. It was a very long time ago, but you know, I learned my lesson the hard way. And this is going to come up again later. The only way to deal with this is to face it head on. And we're going to talk about getting your credit report. And we're going to talk about, and I'm going to guess some of you are like me. I guess we're a lot of us are similar in this way. You kind of know what's in there. You know what you did wrong, but you don't want to face it. As long as you don't have to look at it on a piece of paper and it says, ooh, it's in collection or it's overdue, then you can just put it out of your mind. You can pretend it's not there. And so you don't want to look at it. But I'm telling you, if you're going to start a business and you're going to eventually look for financing, you need to look at it. This is going to come up again.
If I can interject, another reason why you want to look at your credit, as we all know, because all the credit card companies offer it, is because of just the volume of cyber crime that's going on. So you might have managed your accounts wonderfully, but if somebody's gotten in there and stolen your identity, or even just started using your credit card when you didn't know it, that's going to mess up your credit. And you'll have a story to tell the lender, but still, it's going to mess up your credit. So in today's world, take advantage of those offers to, I think, at least on a monthly basis, to look at your credit. Not only just to protect you from that, but as David's saying, just to make sure, hey, what is it showing? What can I address and fix before I go asking for a loan?
Yeah, you know what? I always forget to mention that part, because my personal history with managing the credit poorly. I'm 52, so this is the early 90s, right? And so there was no identity theft online in 1993 and 94, right? I mean, it's just that's not a thing I ever worried about. But that is a thing that's going on right now. Whether you are young or whether you are in your 30s or 40s or 50s, it's going on right now. So you should pay attention for that reason.
So now, two reasons to be looking at your credit report.
So now, inquiries example. These are inquiries. These are entities, persons, or businesses that have looked into your credit history. A list of businesses that viewed your credit report in the last 24 months when you applied for credit. Because the Fair Credit Reporting Act has these requirements about what should be available to you. You have to know who's checking your credit because it affects you. All right. And then public record information example, bankruptcies and foreclosures. Those are public records, whether you like it or not. They're public records. People are going to know. Not everybody's going to know. You don't need to tell everybody what's going on in your life. But other entities, when you see credit, this is public information. They can go find this out.
And we will.
Yeah. So what does not appear on a personal credit? Checking and savings account balances. Income, nobody knows. Medical history, nobody's going to know. Purchases made with cash check, nobody's going to know what you're buying. Business account information, it's not going to be on there. Race, gender, religion, national origin, it's not going to be on there. Driving record, it's not going to be on there. Marital status, it's not going to be on there. Now, what's a personal credit score? This is, as I said, the statistical model projects a score, a number that helps lenders determine your credit risk. The frequently used models are the FICO score. Many of us have heard of it. More and more people have heard of the Vantage score. That's a different model. That's a different statistical model. Many lenders also use their own credit scores. They might develop their own internal model, right? And so you could have some numbers, 750, 685, 520, something like that. Kathy, are there many banks actually developing their own internal model that they use more than the external ones, or does everybody just use the external?
I've never been at a bank, and I've always been at community banks, 4 of them. We've always used an outside credit agency, and it's always been Equifax. So we're going by, they call theirs the Beacon score. So yeah, no. Now, and if I can interject, I don't know whether, David, you're going to talk about it.
Go ahead.
The SBA over the last several years has come up with another product, the SBA 7A small loan, in which they have their own score, the SBSS, which I think stands for Small Business Scoring System. And so there's another scoring system that is used especially for SBA 7A loans.
Yeah. Now, let me elaborate on this even more, because my goal here is for you to understand how the other side looks at it. So again, let's just see. I should have thought about this more before. I was thinking about it when I was running this morning. When you're evaluating something, you are looking at it and making a judgment based on incomplete information, but you're trying to make the best judgment for yourself. Now, I don't know, I think everybody shops for a car, new or used. And you're going to be looking at certain factors. And you're going to say, well, let's say you are hyper practical and you're not worried too much about image. And you're saying, okay, I need it to be reliable. What do I need? I need reliability. What else do I need? I need good gas mileage. What else do I need? Maybe safety. What else do I need?
Air conditioning.
Air conditioning. I need air conditioning. Got it. All right. So let's say these 4 things. And you don't care about the color.
No.
And so you're gonna assess whether this is the car for you or not based on these things. You're gonna look at it and go, well, this gets very high gas mileage, but I looked at consumer reports and it doesn't say anything very good about its reliability. So how much is this gonna cost me if I have to repair it too much? Now, this one is super safe, and it's reliable, but if it does need repairs, then they're expensive because it's a foreign car. Oh, yeah, like a Volvo. Volvos are super safe, but it's a foreign car, so the repairs are more if you need a repair, but you might not need a repair. Okay. And the gas mileage, well, maybe it's good, maybe it's bad. So you see, there's all these factors you're using to assess whether this thing is going to be good for you financially or not. Is it going to give you the service you want? And is it going to cost you too much money? And then in your head, you're going to rank these. You're probably not going to assign a number to them, but you're going to rank them. I got the Volvo, I got the Volkswagen, I got the Ford, I got the Chevy, I got the Toyota, and I got the Honda. And you're going to rank them. And you're going to rank them according to what is it going to cost you? What's involved here? And what's the thing that matters most? What matters most to me? Is it the price, the miles per gallon? Or is it the safety? So the lenders are looking at you and they're looking at these different factors. And they're going, what is the factor that matters most, that predicts most, or what are the factors that predict most that they're going to repay me? And instead of merely ranking, because it's not like they're taking the application from Kathy, David, Ken, Natalie, Doris, and everyone else and ranking us, what they're doing is they're assigning a number, which is a score. Looking at the fact, that's what they're doing. Just in the same way that you assess a car, or maybe a house, or maybe if you're renting, you're just getting the place that you're going to go rent, anything like that, okay? So FICO score and Vantage score. Typical score range is from 3 to 850. For FICO and Vantage, we have this information from them about how they calculate scores. So remember I was talking about the factors that you look at. You look at the gas mileage, you look at the safety, you look at this, you look at that, whatever. FICO, what do they look at? They look at past payment history. And 35% of the score is based on that. Then outstanding debt. How much debt do you have? 30% of the score is that. How long have you had credit? 15% is that. New applications for credit, 10% is that. Types of credit, 10% is that. So let's look at this. 80% is how long you have you've had credit. how much debt do you have, and your past payment history. And the biggest one is your past payment history.
Yes.
Huge. Now, Vantage Score. They don't give us a number, but they say past payment history is extremely influential. Age and type of credit and percent of credit used. I'll explain that in a minute. Highly influential, those two. Total balances in debt, moderately influential. Recent credit behavior and inquiries, less influential. And available credit, less influential. Now, percent of credit used. This is that magic 30% number. I don't know, you tell them about that, Kathy. How do you look at that?
Well, we'd like to say, you know, especially if you have lines of credit or credit limits on your credit card, we kind of factor that in with the assumption that if you were to draw your, you know, all the way up to the limit on both, if you were going to max out your cards and max out your lines of credit, you know, how would that influence your cash flow and your ability to repay back this loan? So seeing how much available credit you have, we like to, you know, we factor that in.
Yeah. So if you have $10,000 available, let's say you have 2 credit cards, $5,000 max each, and you have $10,000 available credit, but if you have them maxed out, then you can't get any more because you're already making huge payments on this. If it's credit card, say the minimum payment, right? But if you have it under 30%, and that's what I was referring to with that magic number, if you can keep it under 30%, it's really good. Let's say you have the 10,000 and you have 3,000 or less or under $3,000 in balances. That means you have 7,000 available. You're not using all of it. That means if you need to use more of it, you still have enough cash flow to make payments on it. That's what the thing is, right? That's what matters here. Now, look, it's interesting that total balances in debt are only moderately influential. And total balances in debt are only moderately influential because it's fine to have high balances if you have good cash flow. If you have strong cash flow and high balances, then you're able to meet the obligations. The problem is not high balances in and of themselves. The problem is high balances when they're too high for your cash flow. That's why that is not highly influential. That's why it's moderately influential. So what's a good personal credit score? You know, here's what I notice, because there is no good. It's good depending on the lender, right? What's good to them? But here's what I noticed.
I'm sorry, David.
Oh, I was just gonna say, as soon as my credit score got above 500, I started getting offers for more credit. Right, like, you know, I work hard, I get my balances down, I get the whole thing. I hit 720. I get offers for more. They're like, oh, this guy's a good risk. Let's offer him more credit. I get to 730. Oh, let's give him more credit. I get to 740. They're like, let's give this guy more credit. I didn't take it, by the way. Don't take it. But what's good, from my experience, 700 or above is good because they start offering you more.
And that's what I was going to say. When we pull somebody's credit report and I see that it's at least in the 700s, I'm happy. If it's the high 6s, let me dig deep and see why it's in the high 6s. I'm okay with it, but I'm always happy when I got that 7 number there.
Yeah. And we'll get into how you can get there because it's not there. So keeping up with your personal credit report, you know, you can receive one. This was a law that was passed in the 90s. I remember this. One, and in those days, I think this was before I think the first time I did this in the 90s, you did it by phone. Am I inventing that, Kathleen? Because it wasn't a website. I think
that is right. That is right. And when I would have to tell someone, hey, listen, I pulled your credit report and there are some issues on it. I can't give you the credit report. If you want a copy, here's the 800 number.
Yeah. You called an 800 number and you verified who you were. And then, like, I don't know, 2 weeks later or a week later, something like that, you would get your copy from each individual, because I had to call each agency and get my credit report from each one. Now you go online, it's freecreditreport.com, because this was based on, or annualcreditreport.com. That's what it is. It's right there. Annualcreditreport.com. there was a law passed saying everyone should have one free one, because normally it costs money to get it, because these companies, Equifax, Experian, they're for-profit companies that sell their information, their service of information. They sell that. So you used to have to pay until this law was passed and said, no, this affects your life, directly. You can't, this is almost like a utility. This is almost like food in our modern world. You need to know what's on your credit report, and you shouldn't have to pay for it. So you get a free one per year from each agency, right? You can go get it.
If I can interject one more time too, most credit cards today, I have a Capital One card, I have a United card, which is backed by Chase. Both of them, as part of the features of this particular credit card that I have, offers me a free, called Credit Wise, I think with Capital One, offers you a free check on your credit.
Yep.
They might not give you a credit report like you're used to seeing that gets pulled, but they'll tell you what's on it, and if you've gone up or down in your score and why. And so again, a lot of credit card companies, especially the big ones, are offering that on a monthly basis.
Yeah, I only have 2 cards, and each one gives me a credit score, not the full report, but gives me a credit score.
Yeah.
If I want it, it's right there on the app. I can.
Yeah. Yeah.
All right.
Yeah.
So get your reports regularly, review them for accuracy. That was the thing that Kathy mentioned regarding the identity theft. But also there might be mistakes.
Yeah.
You have to remember that a lot of the information that the agencies, the credit reporting bureaus get, that's information in which a human being has done the data entry. It's still data entry. We do not live in Star Wars and Star Trek times where you just talk at the computer and it does things. No, it's still human data entry. They can make mistakes.
Yeah.
You should review them to make sure they haven't made mistakes, because it does happen. It happened to me once. I remember it happened to me when I was in the Army and I was stationed overseas. I was in Korea. 2 things happened to me when I was in Korea. One of them was I see my credit report and I'm like, what the hell is this? I've never even been to Wisconsin. What is this? All right. So I called them up and I got it resolved, and it was a problem. Another one was my checking account got drained because somebody in Ontario, Canada, and in Columbus, Ohio, had been doing something. And I remember I called them up in the middle of 3 in the morning, for the time in the US. I called them up, hey, what's going on with this? And they said, oh, that's not you. I said, no, I'm in Korea. They're like, oh yeah, that's not you. so it got fixed and everything like that.
Which brings up another thing that just another piece of advice, just like checking your credit score. If you have accounts, I know I have friends that have accounts at maybe 5, 6, 7 different banks. And so some of them, they're not active. Always check them though. Always check them at least once monthly to make sure that somebody didn't go in and drain your accounts. Somebody, again, cybercrime, went in and drained your account. So always be aware of where all of your accounts are, and make sure you're checking those statements or checking them online at least once a month. Make sure that nobody's stealing from you.
Yeah, this is the sort of stuff that when your company gets big enough, you have a controller, or you have a CPA, you have somebody internal, maybe you get a CFO. If you get big enough, they're going to be doing this. In the meantime, that's you.
Yes. Yes.
Now, if you're going to dispute something, you do it directly with them. You provide copies of documentation, but never send originals. You send the disputes to them, and you request a new credit report to verify that the correction was made. And you're a business person, you do a negotiation, you should be able to do this. You go, look, I found this mistake. They've accepted their mistake. Let's assume that happens. And you say, I want you to send me a new credit report. I don't want to be charged for it. I want you to send me a new one to verify that you fixed this thing, right? Get that done. So
And to reiterate what I said before, fortunately, a bank cannot share the credit report that they got. We can discuss what's on it, but I cannot physically send you a copy. That's against most agreements between banks and credit bureaus. You do have to go in and get your own copy.
Right. And that's because the credit bureaus, like I said, they're a for-profit business. Right. They don't want the bank to be a sneaky backdoor way of you getting a free credit report.
Right. We're not trying to be difficult. We're just limited to what we can do.
Yeah,
Restrict.
it's not the bank just because they want to be jerks. No, it's because
Right.
the agreement the bank has with the credit reporting bureau is the credit bureau says, okay, you can have this, but you can't be giving it to them because we need to sell these to make money. And we're already obligated to give a free one to the customer once a year anyway. See what I mean? So it's not about the bank just being jerks. It's a business relationship they have with the credit reporting bureau. All right. Now, Fair Credit Reporting Act and the Fair and Accurate Credit Transaction Act. These are regulations for personal credit bureau reporting. So this includes that for what purpose the lenders and other businesses can obtain your personal business credit report. This is for when you need to give permission for others to see your personal credit report. And it controls your rights to see your personal credit report, of course, and your rights to dispute information on your personal credit report that you judge to be incorrect. It is all established a process to make it a little more fair and a little less David and Goliath when you're dealing with the credit bureau. Because some of us on the call might be old enough to remember. I mean, I was very young, so I didn't really know about this, but like someone my dad's age, before these things, if you had a problem with the credit bureau could just be like, we don't care, whatever. They just could drag their feet and not do anything because it didn't matter. They weren't legally obligated to do anything. And so now they're better about it. And like I said, I had some problems 13 years ago when I was in Korea, and it got solved pretty fast, So that's what these acts do. Okay, so in your booklet, you're going to see something like this. Here's a sample credit report. They don't all look like this, but this is pretty basic. This gives you an idea. It might be easier for you to see it on the booklet if you have it on your computer, if you printed it out. It's got the names, got the report date. It's got potentially negative items. That's number one. And then number two, accounts in good standing. It tells you the status, open. It's never been late. The other one, closed at the consumer's request. Public records, nothing listed. Requests for credit history. Oh, Visa requested credit history,
Hey, David.
Yes.
That slide is really small print. Can you make it larger?
I don't. Let me see.
David, I think if you go down to your bottom bar there, I wish I could point it out, kind of where, where
the slide itself is, yeah.
There you go. Or actually, I was going to say, make it more of a slideshow and hit the one that's 2 over from that slide rule.
So is that big? Did it get bigger? Because I did increase it. Did it get bigger?
It did.
Yeah.
If Kathy's directing you can make the whole slideshow bigger so we can see it. If you go down.
Yeah, so go down, put your cursor down at the bottom. It's the one.
Right there.
Right there.
Is that it?
And go to the next one over.
To the left?
Yeah.
Is that it?
All right. I don't know why yours is doing what mine does.
I honestly don't know.
All right, keep going.
Yeah. All right. Hey, to reiterate, we're going to be doing these things for a series. We send you information on how to get the booklet, print the booklet. This is why, right? Like I said, this thing is meant to be done in person, and we're improvising here to get it out to people in a more convenient way. But this is meant to be done in person, which is why this sort of stuff happens. Okay, so here we go. It's a little bit bigger
If
now.
you wanted, I could share my screen.
Oh yeah, let's do it. You want to? Okay.
And then you can tell me when to go. Okay, unshare. I'm going to share real quick.
Stop the share, and then you go for it.
Okay. Share. And share. I hope this works. No, window. And there we go. How's that look?
I mean, is it better? I hope so.
Because I can't see it anymore. Ken, is that better?
You need to make it larger.
All right. Oh gosh, I'm sorry. I thought I was helping, but now I can't make it larger.
And in fact, that's okay. Just know that we can't see what you're talking about.
Oh, here we go. Now I should be able to do it. Hold on. And why can't I make this larger? All right, I'm not being helpful. Wait. I'm gonna stop sharing. Dave, can you share again yours?
Okay, I'll go back to mine.
Sorry about that, because I thought I was gonna be able to help out, but no.
All right. So,
If you're doing that, there's a couple of questions in the chat.
all right.
One, yes, the presentation will be sent, can be shared. There was the booklet emailed to us. I'm not sure what that was referencing. And then, are you going to touch this later? One person wrote in here, Tia wrote that she paid off a credit account, and her credit score went down instead of up.
We can get to that, but I mean, well, actually, Kathy, why do you think that would happen? I mean, they may not be connected.
I'm about to say it might be just coincidental.
No, it happens. So this is a situation. So if you have a personal loan or a car loan, and if you pay it off, you know how you always tell people pay down your credit cards, but don't pay them off, because you have to have certain activity to get scores. So I personally keep a small loan open so my credit card stays up. so my credit score stays up. So if you pay off everything, that affects your credit score. So typically you say pay it down and don't pay it off. Especially if you don't have other credit, like if you don't have a mortgage, if you don't have, any long-term debt, like a mortgage or a car loan or something, if you pay everything off, then your credit score is going to go down because you don't meet all those factors. And how much credit do you have? What's your exposure? Yada, yada, yada. So you don't want to pay everything off, or your score will not be maximized.
Got it.
Right. And this goes to, again, seeing credit from the point of view of the extender of the credit. Okay. Remember that extenders of credit are in the business of extending credit to make a profit. Like you're in the business of doing your business to make a profit. And so for them, a good borrower is a person who is using credit. If you're a lender, a person who never uses credit and pays for everything cash is useless to you. If you're a lender, like they're not a customer. That's why that happens. But if you are using credit and demonstrating that you are using it well and using it wisely, then you're a customer they care about, or a potential customer they care about. That's why that happens. If you pay everything off, then, and I'm a lender, well, what good are you to me? You're just somebody who doesn't need credit. You're not my
Actually,
customer.
that's addressed on the next slide.
Yeah.
At the very bottom.
Yeah. Here we go. Building practices. So are you guys seeing my thing?
No.
No. Okay. Let me go back to it. Let me get it back on. Did you stop sharing yours?
I did.
Okay. So let me go back to this thing.
Because it wasn't working.
Oh, here. Yeah. Here we go. Share screen. And there we go. Share. Okay. So you should be seeing it here. All right.
Okay.
Let's go back to this thing. Where was it? Here, best practices. Maintain healthy credit, pay your loans and other bills on time. Keep outstanding revolving debt balances low, 30% being a magic number for that. Keep it under 30% or start moving in that direction. You will know. In a sense, you don't even have to get a regular credit report. You will know it's getting better because the volume of credit offers will increase. Maybe in the last 6 months, no one offered you credit. And then you start paying things down, or you get on a payment plan for something. And then in 2 months, you get an offer of credit. And then you pay it down more, and et cetera. And you keep going this. And after 12 months, you might get to the point where you're getting 2 offers a week. I get about 4 offers of credit a week in the mail. I don't know if that's a lot or a little. I just know I don't even open them, but I know I'm still doing all right because they're still offering me more. That's a good proxy for it. Pay off outstanding collection accounts and other debts. Avoid negative events to the degree that you can. Comparison shop for major loans within a 45-day window. That's what I was talking about, how you don't have to worry about lots of credit inquiries within a certain period of time, because obviously, let's say you're shopping for a mortgage for a house. I mean, you're not going to go to one place. You're going to go to like 4 or 5 places, and you shouldn't be. Your credit score shouldn't drop because you're shopping around. So within 45 days, that's not going to happen. Car loan, home loan, things like that. Okay. Maintain a mix of credit accounts. So you don't have only one.
David, can I stop you? Can you scroll your screen down so we can see on the left your list? There you go.
There. Oh, okay. All right.
I also want to interject here. So that last statement you said, where it says,
maintain a mix of credit.
yeah, a mix. So that gets to that point where, if you don't have any long-term debt, then you don't get the maximum points. So if you only have credit card debt, so it's saying, you want to have some short-term debt, some credit card debt, and so you get the maximum scoring when you have a mix.
Right.
Again, if you want to have one credit card, that's not going to get you the maximum credit score.
Yeah.
Right.
And then avoid closing older accounts that are in good standing. If it's in good standing, just keep it open.
And that's what Ken was just saying. Yeah. That you got to close that old account, your credit score will go down.
So when is this important for your business? Like we said, it's important until you're in the Fortune 500. It's going to be important until you go public and get big, huge. It's going to be important.
It's going to be important when you're seeking financing,
yeah.
and even seeking leases. A lot of the landlords are going to pull your credit to see if your business is going to be able to pay that rent, or it's going to have, if the business owner is shown the willingness and the ability to repay its debt, landlord's going to look at the same thing. So that's when it's important.
So going back here, there's a thing that's in the booklet, the check. And so here we do the business credit reporting, risk assessment tools, used to evaluate the risk of lending, extending trade credit, or contracting with a business. Right. So personal versus business. Personal credit report. Personal identifying information, the credit history, the inquiries, the public record information. Business credit report, very similar, right? Very similar. It's covering the same sort of things. Major players in business reporting. Dun & Bradstreet focuses on how your business interacts with vendors and suppliers. This is trade credit. So when a supplier or a vendor to your business gives you like net 30 terms or net 60, that's credit. If you're not paying for it right now, you're getting credit. It may not be a loan, there isn't a promissory note or anything like that, but you have terms of payment. You're going to pay later for something you got now. That's credit. That's trade credit. That's what they're talking about there. Equifax, focus on how your business has managed business lines of credit and loans. That's what their focus is. And then Experian Business is information from both lenders and business vendors. They're looking at trade credit as well as term loans and lines of credit. Does your bank, Kathy, use any of these?
I was about to say, again, going back to the 4 banks, including this one that I've been, we've never looked at business credit reports. Most of my banks didn't subscribe with Dun & Bradstreet. I always felt that it was garbage in, garbage out on Dun & Bradstreet. Not a lot of, especially small businesses, were registered with Dun & Bradstreet. For a community bank, a community lender, yes, the personal credit is very important. On the business side, it's more of the actual cash flow of the business, or either historical or projected, and the amount of debt on the balance sheet, and the amount of debt that they have to pay. Yeah, never in my whole 25-year lending career have I ever used one of these.
Yeah, you're going to hear that from almost every banker you talk to, right? For the audience, you're going to hear that from them. Yeah. All right. What information is contained? It's, like I said, we already covered this. It's a similar stuff. There's some differences that involve business, but as she said, community banks don't use this. But just so you know, Here's what's different. Public record information, uniform commercial code filings. That's a thing that you only see in business credit. Lawsuits, liens, judgments. You can see that in a personal credit report, but you see them here about different things. Business registrations. That's a different thing. Incorporation and current and past bankruptcy filings from state and county courts. That sort of thing is going to be different.
If I can interject again, I'm sorry, that's what that last thing, public record and information examples, that is something that a bank will pull from a different source. You know, we will check the different jurisdictions for the UCC liens, for lawsuits, liens, judgments. We're going to check to see how you're registered, but all on now, well, now we either use a service or, you know, just go right on to the, you know, the state and county websites for that information. But we do that outside of a credit report.
So regulation, many consumer lending regulations such as the Fair Credit Reporting Act and the other one do not apply to business credit reporting. It's not the same thing.
That's true.
But business credit reporting agencies still have procedures in place for the following: giving access to reports, managing disputes, and determining how long information stays on the report. But there's no act explicitly regulating it. So whatever procedures they have, that's their thing. That's because they think it's good in the long term. They have good customer service, keep a good reputation for themselves or whatever in the business world. They're not obligated to do it like for consumer credit. Business credit scores and personal credit scores differ in those things that we've talked about, but like I said, you're not going to encounter them. Checking your business credit. Okay. You can check it. You know, DNB has their thing. Some services are free, others are subject to fees. Okay. Business credit report checklist. There's another thing in there in the guide when you print it, or if you already have it and you're looking at it, you can go through this thing. And this is a checklist for you to go. If you want to go and find out what your business credit report might say, here's a checklist for you to use. Go read through it and see if everything is correct or incorrect, or if it doesn't apply. Why should I establish business credit? Well, look, you're going to be establishing business. It's not whether you should establish business credit. You're going to establish business credit just by being in business and using credit. It's not a thing that you decide to establish business credit. You're going to, if you go out and get a microloan, an SBA microloan for $30,000, you're going to be establishing business credit because it's going to be for this business. If you go out and get trade credit, you're going to be establishing it. So you're going to establish it just by doing business. Now, whether or not a bank uses your business credit history is a different question, but it's going to be established no matter what. Just like, how do I establish personal credit? Everything you do is going to be, right? Getting credit is going to establish the credit. It's not a choice you make. Just using it establishes.
Yeah. If I can interject again, out of these 4, 5 reasons, you know, and why you should establish a business credit, you know, lending is the least of it. But yeah, but if you're doing business with a federal government or any government, or you're just in that industry where people are going to check up on your business credit, you know, again, customers or insurance companies when you're looking for rates, that is the reason to establish and maybe get it with DNB to establish your business credit. Just the bankers aren't going to really look at it, but these are other very legitimate reasons depending on your industry. I mean, if you're a sandwich shop, maybe it's not that key. But if you're a services or maybe an IT consulting business and you're doing stuff with suppliers, or you order inventory or stuff like that, and you want credit from your suppliers, that would be a good reason to establish your business credit and make sure that you establish it properly.
It's more likely a vendor or supplier will check business credit than a bank will.
Exactly.
They're going to, well, okay, so how are you with your other vendors?
Right.
I mean,
David, can you reduce the size of the text so we can see the full screen? Because now it's super large. Please. Thank you.
But it's still super big. Okay, let me see if I can figure out how to reduce it. Is that better?
Yes, thank you.
Oh, okay, cool. So now you can see the full screen. Got it. Okay. All right. So,
David, I have a question. I want to interject real quick. So I see that you're on slide 40 of 60. Make sure you leave time for question and answer. So
yeah, that's fine. Yeah, a lot of this stuff is repetitive, which is why you see me sort of go through them fast. I usually go at this speed, and people are telling me I'm going too fast. I'm like, trust me, you're not missing anything. They repeat stuff. But yeah, we'll get there. All right. Best practices for strong business credit. We've already said it over and over and over again. It's like personal credit. Pay your stuff on time, right? And don't overextend yourself. Pay your stuff on time and don't overextend yourself, right? How do you maintain good relationships with suppliers and vendors? Pay your stuff on time. It's really simple. Building your business credit history. How do you build it? You build it like the personal stuff. You use it wisely, pay your stuff on time. How lenders evaluate your credit worthiness. We talked about this already. See what I mean about the repetition, right? Let me distill down what this is going to say for maybe 1 or 2 slides, right? They are going to use the credit reporting to assess the likelihood that you will or will not repay. In the same way that you use all the factors in deciding what car to buy to assess the likelihood that this is going to be a lemon and it's going to cost you $5,000 in repairs in the next 2 years, right? You're using all these. One thing I didn't include in that, how many miles are on the used car that you're buying if it's a used car? Is it 25,000 miles and some little old lady only used it, once a week? I actually bought a car like that, a used Honda Civic, once a long, long time ago. I was the second owner of a 1980 Honda Civic in 1995. And it had 40,000 miles on it. Anyway, these are factors. That's how lenders are gonna evaluate your credit worthiness. It's the same thing. They're looking at the factors, they're assessing overall what's the risk to them. Putting it all together, they're gonna look at these famous 5 C's.
Yes.
Capacity, collateral, credit history, conditions, character. Kathy, take it away.
All right. Capacity means, again, as I said before, it all comes down to there's got to be the primary source of repayment of the loan, and that's got to be cash flow. So that's the capacity. Does your business have the capacity? Does its cash flow, either again historical or projected? If you're a new business or a growing business, does it have the capacity to pay back the debt on a monthly basis on time? Collateral, again, go back to there always has to be a secondary source of repayment. If the primary goes away and the business can't pay back the loan, what's going to pay back the loan? That's where collateral comes in. Credit history, again, collateral and personal guarantees. So the credit history of that personal guarantor is important. Do they show the history of paying debts on time so that in the worst case scenario, they're going to have to be paying back this business loan? Do we feel that they're going to be able to do that? Conditions, what are the conditions of the loan, the industry, all that kind of subjective stuff. And then character. If you're not paying your, character comes down to, do you pay back the money that you borrow? You borrow money, you promise to pay. Your credit history is going to show whether you live up to your promises and you pay back. Now, of course, sometimes there's life events that prevent you. And as a banker, as a community banker, I'm always happy to listen to why your credit history is the way it is. But character, it comes into, again, do you handle your finances appropriately, properly, and do you pay back the loans that you promised to pay? So we look all of that together when we are analyzing a loan request.
Now, I'm going to skip ahead to some things because this other stuff is just repetitions of things. And you're going to have the booklets, or if you don't already have them, you have the booklets. You can review this in your booklets. And by the way, everybody's going to have my email address. You can send me an email and ask me a question if there's something you don't understand. But this is pretty easy to understand in the booklet, and so I don't think it's going to be that confusing for anybody. All right. So let me go ahead to what I know is the one where I want to be. Credit reporting and business operations. Credit reporting and business operation. What this means is, accessing credit reports. Your small business can pay a fee to access the credit reports of consumers or other businesses. For example, if you are giving trade credit to someone. And reporting to credit reporting agencies, what it means is your small business reports information about consumers or other businesses that you give credit to, right? Because now you're the one extending credit. Now, why do you do this? You can access these credit reports to decide if you want to extend credit to some client or customer. You might be in that position, not of being the borrower, but where you're the one who's extending credit, okay? Now, and reporting to the credit reporting agencies can help you manage your risk when you have a lot of transactional activity with customers. Not all businesses are involved in this, but some of you might be. So we can't teach you everything that there is to know about this right now. Just exposing you this might come up. You'll have to learn about it. Wrap it up. Key points to remember. Personal credit histories. They are credit reports created by consumer credit reporting agencies and other companies. Credit reports include identifying information, the history, the inquiries, personal public records. And there are many types of scores available with similar ranges in measuring similar factors. They're just different statistical models. FICO, that Advantage one, the other one that Kathy's bank uses. And then with business credit histories, it's the same thing, but for businesses, but looking at slightly different things. One of the big things being trade credit. Not just term loans and lines of credit, but trade credit. Right? Many types of scores available, et cetera, and so on. They're similar to the personal ones. Personal and business credit reporting are important for your business. I think we all understand that. Managing this helps you establish and build strong credit histories. Lenders, why do they use this? They make decisions about your business. They are assessing whether or not you have the capacity to repay. Because guess what? They may believe you have sparkling, shiny, solid gold character, and you might have the worst business idea in the history of business ideas. So it doesn't matter that we think you are more honest than Abraham Lincoln. Your character is sterling. But you want to start a revolutionary horse and buggy business. Like, I don't know. It's not, you're not going to make any money. So you're not going to get the credit. Right. Okay. So understanding your credit and achieving a healthy credit history will increase your financial options.
It will.
So now, who's got questions? Let me stop this here.
I have comments, David, real quick. There are a lot of questions that are in the chat that I want to address. One of the themes that seems to be going on in the chat. The purpose of this webinar is to show you, we are the Maryland Black Chamber of Commerce. I want to make sure that our business community has all the tools and resources available to get the best access to information and resources out there. Banks in general, and so for those of you who don't know me, as of December of 2022, I retired from 40 years in banking. So this is what I've been doing for 40 years. So the key is this. There are alternative resources to access to capital. However, when you don't go to a bank and you go and you utilize one of those alternative resources, the cost of doing business increases. So we want to say, do you understand how do you get the best cost for access to capital? Because if you have good credit, I've never known someone who could not get financing if they had good credit. Mm-hmm. Good credit tells a whole story. It tells you, even if you don't have strong cash flow, having good credit shows that you've managed your cash flow. So this seminar should show you the importance of credit and how financial institutions look at credit and what that role is in access to capital. Now, the Chamber, we have all types of access to capital programs. I'm planning a non-bank access to capital program that's going to show you things like VLT and CDFIs and state programs and county programs and all that kind of stuff. I'm putting that together. We've done it before. We're getting ready to do it again. So there are all kinds of access to capital. But I can tell you, when you go there, the cost is higher. When you're doing, if you walk into a bank and you sit down, and you give them a credit report, and with your application, you got a 750 credit score, you're going to get the best interest rate and the lowest fees known to man. If that doesn't work, we have other resources, but the lower the credit, the higher the risk, the higher the cost of doing business.
Mhm.
Yeah, I saw in one of the things, the key takeaway, banks do not loan to startup government contractors. No, that's not the key takeaway. That's not the key takeaway. The thing is, I want you, my goal was for you to understand how the people who extend credit decide to extend credit. You have to know how they think, just like you have to know how your customers think. Otherwise, you can't sell stuff to them. So you have to know how they think. You put yourselves in their shoes. They have something you want. Guess what? Lenders have something. You have something lenders want. They make a profit by lending you money. They want to lend money. They don't want to lose money. They want to lend money because that's how they make money, the interest. So you have something they want, they have something you want, but they're not going to give you what you want just because you want it. And you're not going to give them what they want just because they want it. You're not going to give them your monthly payments on your term loan just because they want it. You're going to give them your monthly payment on the term loans because you get a good deal for yourself. How do you get the best deal for yourself? Have good credit. Right? Kathy, anything to add to that?
No, importance of good credit. I agree with both you and Ken. It's very important. Other factors, but very important. And you're right. If you have the strong credit, you have the strong cash flow, you're going to get the better and the lower price financing.
Now, I saw something in the chat regarding the decision making, how long it takes for a bank to make a decision, and interest rates. Two things. How long would you take to make a decision to lend someone $100,000? Right?
I hate to say it, but it depends. Go ahead.
I'm saying, like, you're gonna want to check things out. You're not just gonna go like, oh yeah, sure, here, your character is sterling, and your credit score, you have perfect character that a little birdie told me, and your credit score is 750. But you're not gonna give out $100,000 in 24 hours. You're gonna want to check stuff.
Well, and the key to that too is, Kathy can, I'm sure, attest to this. If someone comes to you as a banker and they have strong cash flow and great credit and there's not a whole lot of story to the deal, you turn that puppy around really quickly.
Yeah.
But if you come and you don't have historical cash flow, you have bad credit, and we have to tell a story and we have to put all this stuff together, then it becomes, we're now working with you to try to get to a yes.
Right.
As opposed to, I can get 5 loans on my desk today. If they're perfect loans, they can get funded and relatively quickly. But if we have to go and mitigate, if we have to mitigate the 5 C's that you are not strong in. So if you're not strong in collateral, or if you're not strong in cash flow, or if you're not strong in credit, then we have to start doing a song and dance and put together the best package we can to present and try to get to a yes.
Yes. And to speak for community banks, community bankers, we like to work with you. We want to lend the money, not just because, hey, that's how the banks make money. We want to lend money out in the community because the whole economy will help. So whereas community bankers, if there's a little hair on the deal, try to do our best to make it possible for you.
And I'll share, some of you came on late, but I share with you. So Kathy and I have been doing this for a really long time. So Kathy and I met in 1998, and we were both working with the SBA Quality Circle, the Booster Club. So so what she's telling you, she's an advocate for small business.
Yes.
She has been an advocate for small business for decades. And so she's coming to tell us, this is what the folks are looking at. So you can't play the game if you don't know the rules.
Right.
There's a thing that I remember this story. Let me see I hope it'll resonate with people. This takes me back. This is a thing that I learned in the Army, and this was when I first became an NCO, and that's a sergeant. And then there was another senior sergeant who was telling me about, because I asked him, I was like, why does everybody pay attention to so much little details about like the uniform? Like these little deals, like what? Who cares if your button is not done the right way? Like who cares? Like, but that doesn't matter when you're in the field. And he said, here's why. And I relate this to lending. Here's why. Almost always, if I see something wrong with Soldier on this little detailed thing, and I start exploring, I'll find other things. If you can't do this right, if you're not doing this right according to the rules, what we're telling you, with your uniform, I bet you I'm going to find out you're not doing things right with your equipment. I'm going to find out you're not doing things right with something even more dangerous, with your weapon. I'm going to find out that you're not showing up on time where we need you to be and we depend on you to be. See what I mean? Like if I find this insignificant thing wrong, I am probably going to find a significant thing wrong. And so the credit matters, because if you're not on top of this thing here, how do I know you're going to be on top of your payment on your $50,000 loan? Right? If in your documents you're not keeping track of this, what gives me the confidence that you're on top of things? That's why this matters.
But I like for people to understand how a lender is looking at your loan request so that you can, organize your business accordingly. If we're going to look at projections, start thinking about your projections. And this is why we're asking for these things. So I just think it's always helpful for the small business owner and the entrepreneur to understand how banks, and pretty much we all look at them as the same. The regulators, examiners want us to look at certain things a certain way. So these type of seminars are very good for, again, the business owners and the entrepreneurs to understand how we have to look at it so that you can have everything in a row when you come and ask for a loan.
Yeah. And I'm going to say that I'm getting the sense that I need to put together my Access to Capital series a lot sooner than later. So I will start working on that right away. In the meantime, I'm not an expert at a whole lot, but I am an expert at finance. So if someone has a question, Faye, if you want to call me directly, I would. If there's a way to get money, I know how to get it for you.
I will tell you, out of all the chambers of commerce around, this is the best one because it has a lender at its head, and an experienced lender like Ken White to really guide the members of the chamber. So you're very lucky to have him as your executive director.
Yeah.
And I'm putting my sale in the chat right now. So,
all right. I've got nothing else. I hope it's been informative, and it's not designed to discourage you. It's designed to be realistic with you about where you need to go next and how you need to think about these things to get you ready, right? So that you can accomplish what you want to accomplish with starting these businesses or the businesses that you've already started.
Growing your business.
Yeah, growing them.
all right, with that said, David, thank you for all that you do in your support of the chamber. Kathy, it was so great seeing you again.
See you again.
And I'm so glad that you came and shared your years of wisdom with us, and look forward to seeing you guys both. So David, stay tuned, because David is doing a whole lot of programming for the Maryland Black Chamber of Commerce. He's going to be bringing up in some business planning later on in the year. He's going to be doing some business modeling later on in the year. He's going to host a monthly, I call it Money Matters, but it's not, it's Money Smart. He's going to be hosting a Money Smart series for us on the first Wednesday of the month moving forward. So thank you, and stay tuned for everything that we're doing. And please follow us on LinkedIn, Facebook, and Twitter to see all of the things that we're doing to support the Black business community.
No TikTok? You got to go for those 22-year-olds, man. Come on.
I just told you I've been in banking for 40 years. You know I don't have no TikTok.
All right. See everybody next time.
All right.
Bye, everybody.
Thank you, Melissa. Yvonne, hey, I see you. Emmeline, hey, I see you. Talk to you guys later.